Connor Curley. I work for ADP, Automatic Data Processing. I work on the retirement side, so we set up all the different retirement plans for businesses and throughout the U.S. Everything from simple IRAs, 401ks, and SEP IRAs, and I'm going to talk a little bit about that today.
And I'm Lila Readable. I'm also with ADP. I'm on the payroll side. So kind of talk about, how do you actually pay yourself as a W-2 and what does that look like and how often do I pay myself, that type of thing. And then
I am Andrea Wood of the Wood Law Firm. Some of you have been in my office. I'm a closing attorney right down the street from you all, 2700 Coltsgate. I do residential and commercial real estate closings, and I also do business formation. So I'm going to talk briefly about how to form an S-Corp or an LLC in North Carolina. I think first,
Okay. So just like to get who's in the room. So are any of you currently incorporated or have an LLC? Okay. So I'll talk a little bit about what it's like, and then maybe you guys can let me know if you have any questions about it. So there are legal reasons to incorporate that I'm not allowed to talk to, or I get in a lot of trouble. I'm not a lawyer. I have to say that 100 times a day. But there are also some tax reasons that you want to incorporate. So if you are an LLC, so I think that some people are LLCs, and you can choose to be taxed as an S corporation, or you can just be an S corporation or a C corporation. So a little bit, how familiar are you guys with the different kind of entities? Okay. So I give a little history on that. Yeah. So a C corporation, I say, is like McDonald's. So McDonald's is a C corporation. And what McDonald's does is McDonald's makes hamburgers and sells hamburgers. And then at the end of the day, they have a very large net profit, right? And then McDonald's itself pays taxes. So McDonald's writes a check to pay taxes. And then what happens, I own shares of McDonald's. So I have like 10 shares, and I get $4 in dividends every quarter, right? So I get a dividend check, and then I have to pay taxes on those dividends, right? So basically what happens is in McDonald's, who's a big company, they pay taxes, and then I pay taxes when I get the money. So the income is taxed twice, once at the corporate level and once at the owner level. So basically what the government did is they created an S-Corp, which is a small business corporation. And all that really is, you're a corporation just like McDonald's, but you've made an agreement with the government that says, I don't want double taxation because it's just me. So I shouldn't have to pay tax at the corporate level and then when I give myself the money. So what I'm going to do is have a pass-through entity, which is similar to an LLC. So the pass-through entity, and my company is not going to pay any taxes. So where McDonald's writes a check and pays taxes, my S-Corp is not going to write a check. The net income of that company is going to flop over on my personal return, and I'm going to pay the taxes there. So very similar to what you guys do right now, right? So you have, probably you've seen it like the Schedule C. You say, this is my 1099 income. Here's all my expenses. Here's my net income, and that's what I'm going to pay taxes on. The S-Corp or the LLC is very similar. It's you just have a separate return if you're incorporated. And here's your income. Here's all your expenses. The net income goes on a different line on your tax return. But the income tax is fairly similar. So it's just a different way of reporting how you do it. So you really want to be, in most cases, a pass-through entity. So you're either going to be an S-Corp or you're going to be an LLC. So the main difference between an S-Corp and an LLC is something called self-employment tax. So I'm sure you guys know what that is. I say nobody really knows what Social Security, Medicare, and self-employment tax is until they become you guys, right? Until you become self-employed, and at the end of the year you file your tax return, and there's a much bigger number on there than you were used to, right? Because when you're a W-2 employee, they just take it out of your check, right? You're supposed to make this, and you just get this, and so you don't realize how much money you're paying. But you guys know because you're self-employed, you're like, ooh, that's a lot of money. Taxes are really expensive. So on the self-employment tax, we think about now, like I said, you have the schedule, and you have your income, all your expenses, and you pay self-employment tax on the net income of your 1099, right? So on an LLC, same thing. The tax is exactly the same. So if you are an LLC, not taxed as an S corporation. your taxes really are exactly the same as when you're just a 1099 contractor. As a matter of fact, if you have a single member LLC, it still reports on the exact same form. There's absolutely no difference. If you make the election to be taxed as an S corporation, that's where the differences come in. And the difference is in that self-employment tax. So with the LLC or the individual, you pay self-employment tax, which is 15.3%, right? So it's not a small percent on that entire net income. If you incorporate, you wear two hats. One, as the employee, that's why she's going to talk to you about payroll, and two, as the owner. So go back to that McDonald's thing, right? So they pay their employees, and their employees pay Social Security and Medicare out of their W-2s. But when I get my dividend check as the owner, I don't pay Social Security and Medicare on that. That's just investment income. And that's kind of how the S-Corp works. So you have a hat with the employee and a hat as the owner. This person pays self-employment tax. This person doesn't, right? So you could save a ton of money. You think, oh, that's great. So if I net $100,000 and I pay it all to myself as the owner and none as the employee, I'm going to save $15,000 because it's 15.3%. What a great idea, right? The government is very much onto that, and they do not allow that. And that's why you need the payroll people, right? Because they're very clear that you have to have a reasonable salary. So you have to pay yourself a reasonable amount as this employee. So you're only going to save the self-employment tax on the part that you pay yourself as an owner. And I've been doing this talk probably for 20-something years. 20 years ago, it was much more aggressive on what you would pay yourself as the owner. Like I said, the IRS number one issue really is reasonable comp with S corporations. So you can't be as aggressive. I tell everybody the doctors ruined it for us because the doctors were doing $12,000 a year as their salary, $500,000 as the owner, right? So they caught on to that and they're like, no. So you have to decide a reasonable salary, and you can work with your professional and do that. The added costs are, if you're incorporated, you do have to do a separate tax return. So you have to file a separate tax return. So whatever your accountant charges for that, you'll have to do that. And then you do have to have payroll. So whatever the payroll company charges you to do the payroll are really your extra costs after you incorporate. And the state charges you $200 a year now for your annual filing. So those are your additional costs. So I think you always have to think about those. I use a number of somewhere around a net of 30,000 or so. If you're netting, I think, over $30,000, so that's after your expenses, there's probably some real savings to go ahead and do the S-Corp, right? If under that, if you're just going to net somewhere around 20,000, there's probably not a huge tax advantage to doing it. Now, there might be legal reasons to do it, but there aren't tax reasons to do the S-Corp. So that's kind of thing. Like I said, I always just think about McDonald's because it makes it easier to understand how the taxation works. And that's really S-Corp taxes in a nutshell. You have to remember that you have to pay yourself a salary. I highly recommend using a payroll company. I will tell you, so we're a CPA firm, and we use a payroll company. The penalties on not filing your payroll are very, very large. So basically what happens is, you think about it this way, that if you don't pay your income taxes, they barely bother you. I mean, they're not aggressive in their collections. But with payroll taxes, they think of it as stealing. So they're super aggressive. They will come to your door, they will find you, and they will get their money somehow. And the reason is, if you think about it, remember when you were a W-2 employee, like I said, you were supposed to get $1,000, but you only got $500. Well, the company kept that other $500, and they're supposed to send it to the government on your behalf. And so if the company keeps that money, they're stealing your money, or the government's money, however you want to look at it. So they're very strict about your payroll. So the things that you need to know if you're going to incorporate, like I said, is you have to keep things separate. So the one thing you do need to do is open a bank account. I think Wells is going to come and talk about that. So you have a separate federal ID number, and you have to stop commingling your funds. So right now, if you're not incorporated, you can put it in any bank account you want. So you really need to incorporate. You're going to talk about how to do that, right? So you're going to do that, and then you're going to get a bank account, and then you're going to get your payroll set up, and then go from there. So, what kind of questions do you guys have? Anything? Thoughts? Is anyone that's currently incorporated, did they have any problems that they want to like share with people?
Well, it just seems that it should be an S-Corp then.
Mm-hmm.
So that's just the way to go.
I think so. Yeah, you can also be an LLC taxes in
Does
this.
it really even out once you're paying for ADP and everybody else?
I think if you're going to net over 30 or 40,000, it is. Because
But how much? So you say it's 50.
okay, so your savings is 15.3% of whatever you choose to pay yourself as the owner. That's the main savings. So let's say if you're netting $100,000 and you decide to pay yourself $70,000 as the employee and $30,000 as the owner. So I'm not good with quick math. What is 15% of the $30,000?
Okay.
Is basically what you would save, which I think is $4,500. Right.
And so the 70,000, how do you take that money out?
You will get the correct way is you will get a paycheck. So you have a $70,000 that you'll pay yourself, and then they take out the federal withholding, the Social Security, the Medicare, all that, and then you get a paycheck just like an employee.
Okay, but that still doesn't understand. Where did the extra go?
To the extra, the 30,000, you just write yourself a check. Is that what you were asking, or did I understand?
I'm spending all my money. Let's just say that.
Okay.
Even though I'm saying it's only 30,000, I want all the money for me.
Oh,
I'm
absolutely.
not paying any bills. I'm going shopping at the mall.
Good for you.
I'm just happy.
Right, you're going to get a net paycheck. So basically, you're going to call the payroll company or go online. Go online with the payroll company, and you're going to say, I'm paying myself this month $10,000. They're going to take out the Social Security, the Medicare, all that, and then they're going to give you a check for $7,500 to your personal bank account. And then there's going to be a check that's mailed to the government for the taxes. So you guys currently pay estimated taxes, right? You will no longer have to pay estimated taxes if you don't want. You can do it through your salary, through withholding.
Each month, each quarter.
It's up to you. It's up to you. So you can set your payroll at whatever amount of time you want.
And so at the end of April 15th, we won't do anything.
If you've done a good amount of planning, then hopefully you've withheld enough from your paycheck that you paid your taxes.
But there's no penalty for taking the other money.
So the other money is called distributions. So you can think of it as distributions of previously taxed income.
Okay.
So basically, because remember that net income of the company is plopping over on your personal return, so you're still paying taxes. So that's your money tax free to just take out because you've already paid the taxes. It's not like you're avoiding taxes. All you're avoiding is the self-employment tax.
So when you get your K1,
Mm-hmm. That's what the form is called.
That shows up
Mm-hmm.
on your personal.
Mhm.
You're still paying.
That's where the taxes are. Mm-hmm. Yeah. So basically, you do a information only return, which shows the net income that you're going to pay taxes on, and that's the K1, and that's what you put on your personal return. So
What you're not paying there, Social Security, you're not paying your food.
correct.
But you're still paying state and federal.
You're still paying state and federal. Right. There's not a huge. It's not a big like income tax savings. The best way to save income taxes for whether you be an S-Corp or an independent contractor is making sure that you're tracking your expenses. So historically, self-employed people do not do a great job of tracking their expenses. And that's the key. I mean, that is 100% the key to lowering your taxes. People can tell you a whole lot of other things. The other big one, which he's going to talk about, is retirement savings, right? That's the best deduction you'll ever get in your entire life because you get to deduct the money and you keep the money. And every other deduction there is, your money goes to somebody else, right? So you can buy a new car and deduct it, but then that money went to somebody else. You know, you can buy new bags or you can buy pens to give to your clients, but the money's going somewhere else. With retirement, you're keeping the money. And so there are ways that he's going to talk about like a solo K and stuff like that that you can maximize the retirement plans with your wages. So
this just avoids self-employment tax, but it doesn't save you on taxes.
It does not save you on income taxes in and of itself. It does not.
Okay.
Mm-hmm.
Aren't there some things that you can write off as a corporation that you can't write off as a sole proprietor?
There's not really. I think one of the advantages of being an S-Corp is that you will have to have a separate bank account. And hopefully what you do at that point then is you have a separate debit card and a separate credit card that you use only for business. So I think that it's much more organized, so it's tracked better. So you see a reduction, but it's not that there's an actual expense that you can't deduct that an S-Corp can.
I have a question. So I am one of those different kind of realtors. I do track every expense.
Oh, there you go.
I'm
Good.
very anal. I've been around a long time.
Okay.
I fully maximize myself.
Yeah.
Completely. I pay my quarterlies on time.
Mm-hmm.
So what would be the advantage of me becoming an S-Corp versus being as detailed as I am right now?
Only the self-employment tax. So, like the example I gave before, if you net $100,000 after your expenses, and you pay yourself the salary of $70,000, and then that $30,000 that you're taking out, you're not paying the 15%. So it's a $4,500 savings. Is basically what it is. So that's why I said you have to justify your extra costs. And I don't know what is a one-person payroll about? I tell people $30 a month. I don't know if that's the right number. So you're paying for the payroll because you have to have that. You're paying for the extra tax return, and then you're paying $200 to the state.
I was incorporated for a while. I think my tax return was approximately $1,200. So it was
all
a
right.
little higher, but it was worth it. And I was with Paychecks at the time, and we didn't have the stuff there. It was 401k.
Okay. Right.
So that was a benefit. But what I really didn't understand was how the payroll fees were calculated.
Okay.
I couldn't quite figure out what the benefit was with those numbers and how that balanced out versus what is currently done.
Yeah. If you're really organized, you would just take this. These are my costs of incorporation, which really it's those three.
Mm-hmm.
Well, the first year you have to incorporate, so there's a cost to that. But other than that, your ongoing cost, and then how much am I saving in self-employment tax, and then it's just a cost benefit on whether or not it's a savings to you. I personally am a big fan of 401ks versus SEPs because on the 401k you can do the 19,000 as the. So I'm going to talk about if you don't have employees. I think he's going to go into more detail if you have employees and stuff. But if you don't have employees, you can do what's called a solo K or a uni K or whatever your investor calls it. And so you can take 19,000 as the employee. So let's go to that 70,000 wage. You can take 19,000 of that and put it into a 401k and save it. And in addition to that, you can do 25% of your wages. So it's more usually than a SEP is. So if you're really looking to maximize your retirement and you don't have employees, a solo K can be very helpful. So that is one thing that I think is a little different. I think now solo Ks can be done on Schedule Cs, but I don't really understand that calculation that well. He might. But so
So how do you determine your salary?
that is the $1 million question. I laughingly.
Because real estate, one year you make $50,000, the next year you make $150,000.
Right, and let me say, I use the word salary, but it can be compensation. It does not have to be a fixed number. You don't have to decide in January, I'm going to pay myself X.
Oh.
You can do that as you go.
It can vary monthly or quarterly. You have full control over all that.
You have control over what you set it at. So yes, if you don't sell anything, you don't have to pay yourself. Right? Right, you're not borrowing money to pay your salary.
You can do that online.
Right, yeah, so you would log, and we'll go through all that, but yeah, you can just log it online and you're able to enter in, hey, this month we I want to pay myself this amount. And if you don't enter anything, if you do put zeros, then we'll just file zero still on your 941s, NC5 and all that good stuff.
Yeah. And so the only thing you have to be careful about is remember how you're wearing two hats. One's an employee and one is the owner. The money you take out as the owner cannot be on a regular schedule like a payroll, because then they're going to say that's really just wages and you should have paid self-employment tax on it. Because you've got to be just like McDonald's, right? So McDonald's doesn't send me a check every Friday for my dividends.
So you could do a quarterly dividend.
You could do a quarterly dividend, and you can also do random dividends. Like you're not stuck to the quarterly, but what you can't do is, I'm going to take $1,000 as salary and $1,000 as a dividend every Friday. Right, because then it's like, well, that was really just salary. It has to look like it's really a distribution of profit. So it could be random, it could be quarterly, it could be annually. It just can't be systematic like the payroll. because at the very on audit, that's the first thing they call, and they just say, well, this is really just salary. So, because I mean, they know that you're saving self-employment tax.
And the dividend doesn't have to be spent like back into the company or anything.
Nope, it's no,
You
that's
can
yours.
just go, like I said, go shop.
Absolutely. I take my $4 and shop every quarter.
You can't switch your LLC to S-Corp, can you?
You can. So your LLC is, I guess, standard is taxed under partnership law. So it's taxed under partnership law if you do nothing. But you can choose to make an election to be taxed as a C-Corp or as an S corporation. So if you already have an LLC, you don't have to go out and create something new, get with your attorney or accountant and switch how you're taxed. If you have multiple owners, definitely talk to your attorney and your accountant before you make the decision, because those laws are different. I always say LLC partnership law is really flexible, because whatever 2 reasonable people or 3 reasonable people agree to, then you can do that. I mean, defer to the lawyer, but really, if you want to say you get paid if we sell on Tuesday and I get paid if we sell on Wednesday, if you guys agree to that, it can happen. Corporate law, in my opinion, is basically written for the little guy, for me. So the big guys at McDonald's can't do something improper for me. So there's less flexibility once you become an S-Corp, but if it's a single member, it's just you, so it doesn't really matter.
How does this change our deposits and everything that we get based on our commissions? Do we have to register different with the real estate commission and with
Yes.
the company, all those things, or how does all that work?
Yeah, so you have to register your company and that federal ID number, and that company is now paid instead of you. So basically, your company gets paid, and then you get an employee, get a salary, and as an owner, get the distribution.
Is that all done with do you know if it's all done with the real estate commission as well? I'm assuming yes.
My understanding is that you do have to do it with the real estate commission also. I don't think that's changed.
That's what
Yeah,
that's what I was thinking.
So.
Yeah.
Well, right now, we're not getting Social Security, correct?
You are.
We are, okay.
So when there's a line on your tax return that says self-employment tax, that is your Social Security and Medicare.
Okay.
So it's just called different. So it's called, when you're an employee, you see Social Security and Medicare, and then when you're self-employed, you see it as a line, which is self-employment tax. That is Social Security and Medicare.
Gotcha. So we're still entitled to that.
Yes, like if you pulled your Social Security statement, you would see how much you paid in self-employment tax every year. Now, if you're doing really well in like finding all these expenses, then you might not be paying a lot in Social Security. And that is something to think about, regardless of the politics around Social Security. Know that you are paying less into Social Security and Medicare with this plan, right? So if you're making $100,000 and you're only paying Social Security and Medicare on 70, or previously you were paying it on 100, it does have a small impact on your benefits, but it might not matter. I always say Social Security is really good to work with. If you call them, they will tell you, they will sit with you and run scenarios on how it'll impact your Social Security.
I know that there's a level that you get to income-wise where you're no longer charged.
It's around $120 right now, $120,000.
Okay, so when you get there, so does the self-employment tax stop at that as well?
It goes down. So if you're an employee, you only pay Medicare after $120,000. You don't pay the Social Security portion. If you're self-employed, it goes from 15.3 to 3 point something Medicare. So it goes down once you hit the cap. So it is a big difference. And
It's the same tax.
yeah, and it's around there. I don't know the exact number. So 127.2, he said. 128.4. He just looked. He Googled it. And then they just changed it like 4 days ago.
The law question says 1099 employee not able to apply for unemployment. Are you able to under an S-Corp?
Yes, but only on your wage
I'm
piece.
just saying, yeah, right? I mean, just-
Yes. Yeah, and it did actually become fairly important during the disaster of whatever that year was when the bottom fell out, because there were a number of people who had businesses who did register for unemployment during that time. So I don't know, that's a huge benefit. It's not a huge expense. So the unemployment you pay to the federal government, I think it's $42 now. I think it's $42 a year. And then I think based on the state, they start you around, I think, 1.2% still. So it's probably like $100 that you pay in. So it could be a very big benefit. Yeah. The really important thing that the tax law change doesn't really affect you guys as much. A lot of the tax law changes for people with expenses was they took away unreimbursed employee expenses. It's one of the big, so like I talked to a lot of salespeople that are not 1099 contractors. When they were W-2 employees, they used to be able to deduct a lot, and now they're no longer able to deduct that. So you see a lot of W-2 employees trying to become 1099 contractors because you guys didn't get hurt in that.
The new changes that allow 20% reduction on income for professionals like us, is there a difference between self-employed or incorporated?
No, it's the same deduction. Still has all the same limits. Yeah, so you guys are like us, where you can deduct it as long as you don't make a certain amount of money, and that is on your joint return if you have a spouse. So
You don't lose any deductions.
you do not lose that. You can still qualify for the 20% as an S-Corp. Now, the one little caveat is on the S-Corp, it's only on the net income that is flowing over to you. So really it's part that you make as the owner. Your W-2 is not included. So that's it's one of the reasons why we think that they're going to look at reasonable comp even more. It's because there's an extra reason to lower your comp. Right.
As far as that reasonable compensation, if they were to like look into it, would they say, well, the previous year you made $100,000, so this year you only paid yourself $20,000? Like, is that something they would? Is it supposed to be
If
based
you
on
actually,
previous year's income?
no, if the company made less, you'll be fine. So remember, so now the company's making money, right? So if the company made $50,000, let's say the company made $200,000 this year, and next year the company only makes 50, it's perfectly reasonable to have lowered your wages.
Okay.
And they don't even look at it if you're not taking money out of the company. So let's just say you went from 200 to nothing, right? And you didn't take any money out of the company. You don't have to have a reasonable wage then, because there's nothing for them to change, right? If they're looking at those two buckets, here's my paycheck, here's what I took as the owner. Well, if the owner didn't take anything, there's nothing to make payroll. So you can adjust from year to year based on how much you make. Now, if it was opposite, you made $50,000 one year and then $200,000 the next year, and you never increased your salary, they would probably say it should have gone up a little bit.
Right. Well, I'm saying like last year, I'm not an LLC, not an S-Corp, nothing. Just that's what you made that year.
Right.
The next year, and then I set myself up as an S-Corp and only pay myself basically like a fraction of what.
No, that's okay. As long as it's reasonable based on that corporation and how much you took out.
Okay.
Did you have a question?
Yeah, so my mom has an S-Corp.
Okay.
She has a corporation S-Corp, and I hold a percentage of shares in her corporation.
Okay.
She is retiring this year, so the percentages are going to change where I'm taking over all the shareholders, because she has all the percentage because she has to be able to claim her Social Security and stuff. And when you were talking to our accountant about how to set it up, since I'm taking over the corporation and the taxes and doing all that, how to get it set up, it's still real estate based because she does title searching.
Okay.
How to get it set up for me since I'm an agent. They said we would have to DBA and umbrella myself into the corporation, and it would be 2 DBAs, so doing business as, and we both, my mom and I, would have to DBA ourselves to work under that corporation.
You don't have to DBA, but you have the opportunity to DBA.
Okay.
So a corporation can do one thing or can do 100 things.
Okay.
And it doesn't matter.
Okay.
I use GE as an example. Think how many things GE does, right? So you can do as many things as you want under that corporation. You can sell candy out of there, sell Mary Kay, do real estate, and be an actuary. So that's not regulated, but you have the opportunity to be a DBA, to hold yourself out there under a different name.
Okay.
I don't know that you would need it being in real estate, because I don't think you're advertising your company name anywhere. So I don't know that I would. I don't know how much does it cost to do a DBA. I don't know.
It's just getting it on record with the county, like
Yeah.
$6, it's not more.
Yeah, so you have the opportunity to do that, but it's not required.
Okay.
You could just run it
Just flat
however
out
you
use
want.
the name of the corporation
Correct.
and then just keep money separate.
Correct. The main thing, the other thing, and I don't know that in real estate you have a lot of legal liability. She'll talk about that. But so the main thing with the money is, like I said, you need to keep that separate from your personal money. It's very stringent. That you don't want to commingle the funds in any way, shape, or form. And one of the main reasons, again, I can't give legal advice, so she'll talk to that part, but is if you were to get sued, if your corporation were to get sued, there's a couple questions they usually ask, which how you were organized or incorporated, and the answer really needs to be by an attorney so that your paperwork was done right. And then the second thing is, are you commingling your funds? And they're asking those questions, again, if you were sued, you can't give legal advice, because they're trying to what's called pierce the corporate veil and say the corporation is just a scam. It's just really you. And then they can come after you personally. And again, the attorney will talk about all that. but so you do really want to keep your money separate.
So one quick question.
Mm-hmm.
So we're in June.
Mm-hmm.
Let's say someone is a sole proprietor right now and they convert over to the S-Corp. So from a tax perspective, does it make a logistical nightmare, or do you just...
It's not a logistical nightmare, but the one thing that you should know is that company starts the day, it's like born the day it's incorporated. It's inorganic something. So it's basically, what you can't do is if your big commission was in March, it's too late to put it under the corporation. So if you know that you're going to have something big coming up, you need to have it done before that. So, because basically, if you did it today, all your income before that's going to be reported the way it was before, and then you start the corporation now. So what you can't do is go backwards. Like you can't at the end of on December 30th be like, I want to be incorporated, and put all that money under that. Does that make sense?
It does. So you just don't want to send a W-9 with your EIN number to your old employee and say, hey, file it under this.
Correct. Yeah, they can't do that because they already paid you under that. Right? Or they shouldn't do that. How about that? They probably can. So, and I'll be sitting here if you have other questions as we go along, but I think we're going to talk about that.
Andrea,
I'm going to talk briefly about how to form it, but let me just give you an example. The lights right here. Sorry. What I do personally, because I think it might help answer your question in the back. I am an S-Corp. I pay myself reasonable compensation that my accountant makes me pay, because we cracked down, because I used to not do that. I used to just take all distributions. He's like, you can't do that anymore, several years ago. So I pay myself reasonable compensation, and then I take distributions on everything else. So I actually, and I use ADP, and they've been fantastic, really, really easy to work with, and all online. I pay myself a salary every month, and then throughout the year, I take distributions as I need them. My 18-year-old son calls me up and says, hey, Mom, you put money in my bank account? I can write myself a check, call it a distribution, put it in my bank account, transfer it to him, that type of thing. At the end of the year, I have a tax return for my S-Corp, for my company, and I get a K-1 from that, and then I also have my W-2. So I have both that go on to my husband and I's personal tax return. So that's the way I handle it. I don't take a distribution every month, like you said not to do that. I don't take the same amount every month. It just depends. And just like you, my business goes up and down, because I'm dependent on real estate also for a large portion of my business. So I will, at the end of the year, the other thing I do that my accountant told me to do, you can tell me if he's giving me bad advice, but I do not do estimated taxes. At the end of the year, I look about what my profit is. He and I talk, and then I increase my withholding through my paycheck at the end of the year to make sure that I am covered, because our business is so flexible. We have good years and not so good years. I don't want to have that estimated tax payment. My goal is to try to avoid getting a refund, actually, with my tax return, because I don't want the government to have my money all year long. So my goal is to try to equalize it, pay as little as possible, get as little back as possible, and try and have close to zero as I can.
And that's really good advice, because withholding is deemed paid throughout the year, even if you do it in a year-end bonus. Mm-hmm. So, if you have to hit those estimated dates, you have to pay it by that date, or you get an estimated tax penalty. If you're doing it through withholding, that doesn't exist, even if you pay it all in at the end of the year.
Mm-hmm. So that's how I do it.
Great advice.
So I will call up my payroll service and say, hey, this has been a great year. I want to pay an additional $50,000 in federal income tax, an additional 20 in, state. I'm just pulling those numbers out of my head, but they're not real. So I wish. And then they'll take it out of my paycheck. They'll take it out and they'll pay it, and it will count for the whole entire year. So that's the way I do my business. Does that help at all? Does that make sense at all? Okay. And then on the other side, and I decided for S-Corp rather than a sole proprietorship or a partnership because of the liability protection. Because being incorporated or being an LLC does provide you with a level of protection. If you are a sole proprietor and something happens and somebody wants to sue you, they can sue. You are the business. The owner and the business are the exact same thing. For a partnership, it's even worse because you're responsible not only for yourself, but also for the actions of your partners. So my personal choice is an S-Corp. I also have some real estate holdings because I think real estate is the best investment ever. And so I have some real estate holdings that I have in an LLC. Again, because we have some beach property that we rent out. We're about to buy a condo in Athens, Georgia, where my son's about to go to school to, have some college kids live there and him live there. And they're all under LLCs because, again, I want that protection. The other thing is with, in my mind, and I'm sorry, I'm operating like 2 hours sleep because my son I was just talking about has been sick for a week and a half, so missed his high school graduation. So it just went out of my head, but it will come back. So anyway, so I have LLCs and I have an S-Corp. And the LLC runs through, that anything having to do, we don't make any profit on the LLC, but if we ever do, it will run through as profit on my personal tax return. So let's talk a little bit about how to form an S-Corp or an LLC. I'm going to focus on an S-Corp because I think that's what we're really trying to focus on today. First thing you have to do is decide on your business name. And your business name needs to have the word incorporated or company, so you have to designate that it is a corporation. So, and if it's going to be an LLC, you have to call it an LLC. And so you decide on the name, and you can go to the Secretary of State. You can look up and see if that name is available. And then if you want to hold the name, you can reserve the name for 30 days. It costs $30. You don't have to do that because if it's available, you can get it right then. Then the next thing that you're going to do is you're going to go on and you're going to, this is all with the Secretary of State, and you're going to file your articles of incorporation. Okay. And let's see. I had notes about different types of formation for limited liability companies, I think. But for S-Corps, you're going to file your articles of incorporation, and these must include, obviously, the name of the company, the address, the number of shares. Of course, the minimum number of shares is 1. The classes of stocks, you're going to have common stock for your corporation. You have to have a registered agent. The registered agent can be an individual. It can be another corporation. It can be an LLC. Most likely in our situation, because we're small, we're not going to be a big McDonald's. Our registered agent is going to be ourselves. So you're going to have the name and address of your registered agent. You are going to have the name and address of each of the incorporators and people that are going to be on the board of directors. And then you have to file them, and the filing fee is $125 with the Secretary of State. Within 5 days, you're going to receive notification from the Secretary of State of whether your articles of incorporation, your filing is accepted. So you'll get an email saying, yes, you're good to go. You cannot use the corporate name or any information about the corporation until you get that email saying you're good to go. But it's a quick turnaround. It's within 5 days. Then what you're going to do is, after you've gotten your registered agent, you've done all that, you're going to do an operating agreement. And a lot of people skip this step, but it's really important. You really want to form an operating agreement that says, this is how my corporation is going to run. People think, well, it's just me, I don't really need that. But later on, if you ever want to do things in the corporation or the LLC that require proof that, hey, you can act on behalf of this, the attorney's going to ask you for your operating agreement. So especially important with LLCs, you're going to want that operating agreement. It's not hard to draft. You should have an attorney do it, obviously. But you could do it yourself, but I wouldn't recommend
You
it.
have to have that to file or apply for a firm license with the real estate commission.
With the real estate commission, yeah. So, I mean, it's a good idea for general. Thank you, I didn't realize that. So, because I get a lot of people that come in and I say, well, where's your operating agreement? They're like, oh, I don't have one. You really need one. So, buying and selling real estate. People, LLCs that want to sell real estate, I need their operating agreement to say who can sign on behalf of the LLC. So, and then you're going to get your EIN number, which is very easy to do. You can, really, really easy to do. Get your EIN for your corporation. The IRS is going to send you that number. You're going to use that number on all of your tax forms. And then last but not least, you're going to file your annual report. And it's $200 now. They increased the cost. But again, it's easy to do. You are supposed to have board of director meetings and keep notes. But if you are the only person in the board, that's also pretty easy requirement to
Or
meet.
you can go to the beach with the rest of your board and deduct it.
Okay. I can't give you tax advice. She can't give you legal advice. I can give you tax advice for my tax attorney. So, but the forming the S-Corp is really very simple. But you want to make sure that you have all the steps done. And overall, it's not that expensive. And it's worth it. It's worth it for the liability protection. It's worth it for the tax benefits. And I would, again, personally, that's how I have everything structured. Is I have my company, my firm is an S-Corp, and it flows easily every year. So yes.
But you said your investment properties, you did LLCs.
I did. Okay. I did investment LLCs for my investment property. Okay.
I've got an 18-year-old son who's training me. I have beach condos with investments in disaster.
I'll be happy to help. I feel your pain.
He's like a super nerd at Bank of America, and all he does is yell at me. He's filed. He's like, what is this? I'm like, oh, well, that was the electric bill for the contact beach. He's like, read this file. I'm like, I'm working on it.
Yes, and the other file right there. The other thing with the LLC, I really recommend a single member LLC because then, and I recommend you, because you're going to deal with everything. So whoever is the single member, and I am the single member for all, and I also do a separate LLC for each property. But I am the single member in the LLC because then I don't have to stress my husband out. He doesn't have to do anything or sign anything. And I take care of everything.
Okay, so I need to know about that operating agreement.
Okay. So one thing about that, if you have appreciating property like real estate, you definitely do not want to put it in your corporation. You want it in an LLC for tax reasons. And it doesn't matter like as you're ongoing, but let's take the beach house example. If let's say it's now you're getting ready to, or let's use the house in Georgia. So if you want to give that to your son at one point, if it's an LLC, you can move it out with no taxes. But if it's a corporation, it has to come out at fair market value. So you have to treat it like you sold it. So appreciating property, you need to be in an LLC, not a corporation.
I'm waiting like 5 days turnaround.
Are you well aware of that passing on, so you just change owners of the LLC? I'm sorry.
No. There's like gift taxes and other stuff, but you can pass. What the difference is in an LLC, you can pass things out at its cost basis. So whatever you bought it becomes their cost. In a corporation, you have to deem it like a sale. So if the house in Georgia she bought for $100,000 is now worth $200,000 when she gives it to her son, then now she has to sell it. She has $100,000 gain, not counting other stuff, depreciation stuff. Yeah, it's very, very important on appreciating property.
Yes.
Is there any advantage or differences between doing this versus states like South Carolina and North Carolina?
You can address the tax
on the
implication
tax
of it. For legally, no, it doesn't really matter.
About formation of business.
It doesn't, no. But, I mean, it's just the different requirements, but for tax, it doesn't matter for your 401k or anything.
Do you have to form an LLC in both states?
No.
You have to get the authority to do business in the other state.
Depends on.
South Carolina?
It depends on it depends on where you form it, so, yeah.
And the taxes, it doesn't matter because you pay taxes where you earn the money.
Mm-hmm.
So if you think of a basketball player, right? So a basketball player goes into different states and different cities. That basketball player pays taxes in every city and every state that they play. I use basketball players because they're the only ones that make enough that they're over the threshold everywhere. But even NFL football players, they go and play in the Meadowlands, they have to pay taxes to New Jersey, even though they lived here in North Carolina.
So for us, where does our income, is it coming from North Carolina? Depending on where our firm is based?
It's where you sell the house.
Yes.
Okay.
So technically, if you're selling in both South Carolina and North Carolina, even as an independent contractor right now, you should be paying South Carolina on your South Carolina income in North Carolina. Now, a lot of people don't do that, so it's not the end of the world, but I will tell you that the largest increase right now of CPA world is what's called SALT, which is state and local taxes, because states are getting much pickier because they want their fair share.
So,
Yeah.
but it's, from a legal standpoint, if you can form it in South Carolina or North Carolina. I think South Carolina's fees are slightly lower, but not a lot, like $25. So
It doesn't matter where you're a resident of. I'm a South Carolina resident, so I could be incorporated in North Carolina.
I formed my beach house is in Hilton Head, and my LLC was formed in South Carolina.
And then going to ADP, how do you guys do taxes for state? Do you collect them for both states and W-2s?
Yes.
You pay taxes where you work, so where the income comes from. So if you're getting income from both states, then you'll need both states' tax fees. So
And in my situation, our beach house doesn't make any money, so I'm profit, I just have a loss. So, yeah. But if I ever did have any profit, then I would pay South Carolina tax on it. But I'm a resident of North Carolina. So.
But all of our income technically comes from our firm that is in North Carolina, even though if I sell 10 houses in South Carolina, I'm doing business there, but my payment came from North Carolina. So my accountant's never, I never paid to South Carolina because my income.
I think that's very common. Technically, it's where you
How would
earn
they
money.
figure it out? They'd have to go through.
They wouldn't unless there was an actual audit and they asked the question.
Do you think
So it only
that's
comes
something
down to
will
that,
change?
really.
Yeah. I'm sorry?
Do you think that's something that will change? Because I know South Carolina I have another business in online, so South Carolina now collects taxes online for online sales.
All
So
states are getting
they're
much more
figuring
involved right
everything
now.
out.
Yes, they are.
It'll probably end up that Remax will start
They might.
payments on those transactions from a South Carolina.
No, they can pay you from any bank account. So they can pay, they can pay you from Idaho.
Between if you were set, because I sell equally in both states, correct? But I only pay North Carolina.
I will tell you that Karosh and Hattie, they both do North Carolina. They don't pay South Carolina.
So they're okay, this one.
So again, from a legal standpoint, it's really important to either have an LLC or incorporate just to protect yourself from liability. Because again, the sole proprietorship and the partnerships, you're liable for yourself, and in a partnership for the actions of your partners also. So, yes.
Interesting more information as to with this signage, are you gonna
I can, or I have some cards too, if I can.
Yeah.
Pass out.
I moved across the state line 3 years ago, and now I have the pleasure of paying both North and South Carolina state and federal. And how my account does is they take a list of my state, and it's to North Carolina and South Carolina. And
The other thing for me is that I do just, Julie, right? What? Julie, yeah. Julie, sorry. We just met. Said to keep everything separate. I have a completely separate credit card for my business that no personal stuff goes on there. And that makes it really easy at the end of the year. Every expense runs through that. And then I just hand the little printout that you get at the end of the year to my accountant and say, here you go, because it's already all categorized and everything.
do you do QuickBooks or what do you do?
I do QuickBooks.
Now, I have a question. If you have, let's just say you have all your bank accounts right now, with Wells Fargo or whichever, and you want to get a separate bank account for the LLC or the S-Corp, if it's still registered in your name and like you go and you can see all of your accounts together, is that going to create any issues?
They won't do that. They won't link a business account to your personal account.
Yes, yeah, that's
Oh.
Yeah, you can view it. I think Wells does it by your social, so you can see all of them.
Yeah, and I
Bank
think
of
it's-
America
I
does.
just didn't know if, because we were talking about trying to pierce the corporate veil, I didn't know if that was anything that could happen because they're all viewable in the same area.
No, it's okay that it's viewable.
Yes, you can. So you want to keep all your expenses and all your everything separate with a different account. You're going to need your EIN number before you can open up that. So, okay. Any other questions? Okay.
Yep. All right. As I mentioned earlier, I'm Lila, and this is Hunter. Hunter specializes in the retirement part. I'm more on the basics of the payroll. He covers all of the Carolinas pretty much. So anyone that's listening on the satellite offices, feel free to reach out to him as well. Same with me. We kind of go wherever the wind takes us, kind of like you guys. So everyone's favorite part, the payroll. Oh, there's an introduction. I didn't know if you wanted to add anything else.
Yeah, this is our contact information. What we're going to do basically next, we're just going to go through who ADP is, what's it like to become a W employee, what it looks like on the ADP software, just to plug in your monthly salary, your quarterly salary. Then I'm going to go through a little bit some of the different retirement options. I've got to work with quite a few different REMAX groups over the last couple of years that take advantage of our different retirement options. So we can kind of look at that, and it's going to be based basically on you and your business and what you're trying to achieve. So every situation is different. So I think at the end of the day, the best option is if this is something that you're interested in, take down our contact information, and we can schedule a time to grab coffee or set an appointment, and we'll come and just talk about what your goals are and what you're trying to do. We can help you get all this type of stuff set up, or at least give you information for when you're ready to get it set up.
So I'm sure a lot of you thought that it was ADT, the housing security. Am I right? I can't tell you how many times I've met with someone like, oh, ADT, the housing security. That's not us. So we process payroll for 1 in 5 U.S. workers. We're also the fastest growing retirement provider in the last 8 years. 600,000 businesses across 125 countries. But when I got into this role, I can tell you, I never thought that I'd be working with one employee companies. What the heck? They don't need payroll. They don't have employees. What do you mean? And it's about almost half of my clients are just like you, real estate agents, insurance agents. So I get to learn a lot about it. And 64 million W-2s processed in 2018. So the big question, right? How do I become a W-2 employee? Essentially, all you have to do once you have your corporation set up, have your tax IDs, you really all have to decide, as far as your cash flow goes, how often do you want to pay yourself? You want to, there's semi-monthly, monthly, quarterly, annual. It depends on what's going to work for you. If you need to skip payroll, if you didn't have any closings in a month, that's okay. So really it's going to depend on each individual cash flow and what works best. And then it's going to be with your accountant to figure out how much you want to pay yourself. It's really up to you guys. I don't care I don't even see if you pay yourself $1 million or $1. So that's up for you to decide on what makes sense. And then we're going to take care of the rest. So we do on the back end, and I'll show you a demo on the back end. Like I said, we pay 1 in 5 workers. So we're making all of the deposits. We're doing the federal, state, we're doing the Social Security, Medicare, the tax filings quarterly, and then the I-9 and W-4 compliance. And then on the 401k side or the retirement side, I'll have Hunter explain.
We act as the record keeper, so meaning we keep up with the funds that you have. We do all the buying and selling of the mutual funds. We do all the distributions for the folks that want to start pulling from their retirement, and then on the service side as well if they need to reach out. We also act as the TPA, meaning that we do all the different testing on the plan. We make sure that you're in compliance. The IRS, of course, has tons of rules around retirement as well because taxes are involved. So we make sure that you're taken care of from that standpoint. And then fiduciary services, meaning we're managing the fund lineup. We manage the mutual funds. ADP doesn't itself offer a mutual fund. A lot of our competitors, you often see their fund lineups with their own names in there. So, for example, Principal or Fidelity, you often see Principal on mutual fund lineups. We work with some of the large providers, your Fidelity, Vanguard, JP Morgan, TIA Craft, T. Rowe Price, where the fund lineup is based on the performance and the cost of the client. We're managing to make sure they're performing. We have no vested interest there. We make no money in the mutual funds. We're just there to keep things compliant. So if something is underperforming, we'll take the responsibility to move that fund out and replace it with a competitor of the same exact fund that is performing. So we do take that responsibility, which is huge if in a situation if you have employees, because you being the business owner, you don't want to get sued for having employees in a plan that's underperforming. So we do take that back in and take responsibility on that.
Yep. And then we'll actually mail you your W-2 at the end of the year. So essentially what it looks like is once your account's set up, you'll be able to log in, and if you want to pay yourself from your phone, you can do so. You can log in on your laptop. Essentially from there, all you're going to do is click on the run payroll. And then this is where you get to decide, okay, this was a great month. I'm going to pay myself $20,000, or maybe not so good of a month. I'm going to pay myself $1,000. And then from there, we'll already have your W-4 withholdings in the system. So we know if you're married, single, we know how to file the taxes accordingly. From there, this will show you a breakdown. So we calculated if he's going to pay himself $2,000, there's going to be $385 of taxes taken out. Deductions, that's where you would see, for example, the retirement come out. The net pay, so that's what's going to be deposited into his personal account. And then the employer taxes are the match on the Social Security and Medicare. When you run the payroll every single time, you'll obviously have a business bank account open up at that time. When you run it, you're going to see 2 debits each time to your business bank account. One is going to be for all of the net taxes. The next is going to be for the net pay, which is going to go into your personal account. So if you run the payroll, let's say that you pay yourself on the 30th of every month, and you run it on the 29th by 4 p.m., it'll be in your account the next day when you wake up. It seems weird. Like, what do you mean I'm paying myself? Essentially, you're going to wake up and in your personal account, it's going to be that money. And then to go on with the deductions a little bit more, I'll let you kind of talk about that.
Yeah, and from a deduction standpoint, this is where you'd see the tax savings that you would have, setting up the 401k or SEP IRA or simple IRA, whatever is the best fit for you and your business. This is the deduction. So say this person's getting paid $2,000 and they wanted to make a pre-taxable contribution to their retirement of $500. You'd see the deduction of $500, and then they would be taxed on the $1,500. So that's kind of where the tax savings goes there. That $500, as soon as you process the payroll, is moved into the mutual fund of your selection, where it's invested, and you hope to get gain a return on that. Which you also have access to see all of that as well as far as your retirement goes. So you can see how things are performing. You can make changes on how much you want to contribute, and take a loan on it if need be for a 401k. So just the situation, you have all that access, and you can see it every single day. Mobile as well. I like to check my 401k from time to time. It makes you feel good to say, hey, I'm really starting to build for retirement. Hey, the market's doing great. Really got to make some money in there this month. So, it's also nice to have that there. Couple stats about retirement. 48% of Americans have less than $10,000 saved for retirement. Something that, I think as a country, there's some bills out there right now where they're really trying to encourage business owners to start offering some sort of retirement. We talked a little bit about the politics of Social Security earlier. There's no guarantee that can be there forever. There's more people receiving Social Security now than, as far as the workforce. The baby boomer bunch is a pretty big group. So we're starting to cover that cost, and it's going to be hard to maintain that. So it's great to have a second option, especially one that, you can save some tax money on as well. Only 36% of Americans strongly agree or disagree that they know how much money they'll need to retire. 40% of Americans reveal that they can't cover a $400 emergency expense. So just once again, it's important to have money saved and put away. These are some of the different options that we offer on the small business side. Simple IRA, I'll kind of go through them a little bit. Simple IRA is usually for a business that has a few employees. They want to offer a plan. It's a very cookie cutter plan, not a lot of flexibility, but it does allow you to put away up to $13,000 if you're below the age of 50, and $16,000 if you're above the age of 50. And then there's a 3% annual match. That's the match of the salary. So if you're getting paid $50,000 and the business is matching 3%, that's an extra $1,500 that's going into your retirement account that you, the business owner, gets to turn right off as a business expense. Huge advantage there is you're giving your money to yourself, but then you're getting to claim it off as a tax write-off at the end of the year on the business. Kind of moving your money from your left pocket to your right. A lot of business owners really like that part of it. And it is an employee and employer contribution. So it's coming off of your W-2, right? The SEP IRA, this is only really going to be if it's just you. SEP IRAs would never be a situation if there was any other W-2 employees involved, because they're all employer contributions, meaning it's not deducted off your W-2. It's the business saying, hey, we're going to contribute 20%, and that money is going to go into your retirement. This is also a pre-taxable contribution. The way that works is it's 25% of total compensation up to $56,000. So you kind of be flexible with that. Maybe you can do 10% or whatnot, what you want to do. The 401k, great option. We actually, have any of you ever heard of a Roth? It's like a Roth IRA. So we actually do the Roth 401ks too. And this might be great if you're, a little bit, older in life and you're really trying to play catch up fast. You can basically take that money as a post-tax deduction. It gets invested in the mutual funds, and then all the interest that you make and all the returns you get from those funds, you don't pay taxes when you pull it out. So you pay taxes up front, and then as the money grows, you pull it out tax-free. There's different arguments on what's better, pre-tax, post-tax. This would affect your net check more than a pre-tax contribution was because it's coming out after taxes come out. But essentially, you're paying the bill now. There's arguments with folks that say, hey, as a country, we're kind of financially in debt. The only way to get out of that is to raise taxes. So, potentially in the future, taxes could be higher. Go ahead and pay taxes now, and then get the break on the interest that the money makes. But that's up to you. You could do 5% pre-tax, 5% post. That's what I do. Kind of just hedge my bets. But as far as the 401k goes, under 50 years old, you can contribute up to $19,000 a year. Over 50, you can contribute up to $25,000 a year. And then we offer profit sharing component, which a couple of real estate groups I've worked with take advantage of. Where if you're under 50 years old, you can put up to $56,000 a year, and if you're over, $62,000 a year. So pretty good amount of money, just depending on how well your business is doing and how much you want to contribute to your retirement account. A lot of this stuff too goes into play is meet with your CPA and say, hey, based on what my income is and what I do and what I've done in the past and where I'm at financially from a retirement standpoint, what might be the best option for me? How much money should I try to put away? We have a model on our system when you're starting to contribute that'll say, hey, based on what you're contributing today and that, assuming the average return rate over the last 50 years, this is how much money you'll be pulling at the age of 67. So it kind of gives you an idea. But one thing we forget about as we get older is, healthcare costs, things like that are really expensive when you get, 70s and 80s and above that. So it's important to have something like this to fall back on. If you do have Social Security and you can pull from your 401k and maybe you are still working, especially in real estate, you can sell real estate for as long as you want, to have, multiple streams of income. But from a retirement standpoint, it's great because you're putting money away. You're saving money on taxes. If there are any fees associated with these, you get to write them off as a business expense. And if y'all do have any questions or would like to learn more about the different options or do have something in place and you think, hey, I'm going to set up an S-Corp and I want to, right now I have an IRA at the bank and I want to roll that to the business. We can help you roll it into the business. We help with all of that. And this is just kind of an example, the cost of waiting on retirement. You see here Melissa and Joey. Melissa started at age 25. Joey started at age 35. Joey invested till he was 65 at the same rate. Total amount invested, he put away 30,000. She put away 10, but she had that extra 10 years of interest growing and growing and growing and growing in compound interest. She retired with more money. So it's so important to go ahead and set something like this up if you haven't, because time is our biggest enemy in life, right? That's something we all have the same amount, we can't get it back. So make sure that you're, looking into this. It's very easy to, kind of put to the back burner, because it's something that you may not need you might not think about today. It's not a revenue generating thing for you today, but it is something that's important to put in place. And we can sit down and kind of look at the best options for you. There is a deadline on some of this stuff to start this year. If you were going to put a 401k or a simple IRA in place, October 1st deadline is something that the IRS puts in place, basically so it's not December and you're shoving money, tax money away. The SEP IRA, you can set it up, later on in the year, but for those others, you'd have to set it up before October 1st.
Can I ask a question?
Yep.
Okay, you said that you have something similar to a Roth or 401k, but are there the same limitations as dollar amount for what you're allowed to
do? So you can put away $19,000 on the Roth 401k, or $25,000 if you're above 50. So yeah, you can do that.
Oh, wow.
Yeah, a lot of people don't realize that, but yeah, you can definitely put the same amount. Because say if you open up a Roth, and I have a Roth IRA with Wells Fargo. and I'm able to put up to $5,500 through that. But if it's you as a W-2 employee and this is a company sponsored plan, you do have the flexibility through the 401k to put that much away.
And you can do it overall.
Mm-hmm.
Doesn't the Roth have income limitations for you're eligible?
Yeah, if you get, and that depends.
The Roth IRA does, not the Roth 401k. That's one of the benefits of the Roth 401k is that if you're over the income limit, you can't do the Roth IRA. You can still do the Roth 401k.
Okay. And like I said, that's great because the money that you make on residuals, you don't have to pay taxes on. There's not a lot of investment options, that I can possibly think of that's the case. Yes, ma'am.
I do have one question that really relates to all four of you, just trying to, something just triggered. So you are salarying yourself and you're paying yourself to be a W-2. I do have that business credit card I get every month. Everything's on that. What I would be salarying myself would pretty much be wiped out with my business expenses. So how do you, is that your personal income? You pay your business expenses out of? How do you separate those two?
Make sure I understand the question. I think what you said is the amount that you pay yourself zeroes out to that you would pay yourself less in salary.
So would I pay my Remax credit card out of what I pay myself as the employee?
No, you would pay the Remax credit card out of the company. The corporation would pay that.
So that would be a check that I could write out of that account myself every month, strictly to that credit card.
Absolutely.
That wouldn't go through ADP, that would go through me out of my account.
Correct. Because it would be your business expense.
Yeah, your business, what I do is I have a business account, I have an operating account, and then I have a trust account because I have to run all the money through the trust. But my operating account, I pay my business credit card out of that operating account every month, as well as my other expenses like, the telephone, the rent, all of that.
So there'd be one account.
One account, and my payroll comes out of that for myself and my employees because I have a paralegal and a legal assistant. That all comes out of that operating account.
And also on that 401k, even on the Roth, you can set up that match as well. Say give yourself a 4% match on your salary, and the business would cover that cost. And you claim that cost as an expense to the business as a write-off. That money's still going to your retirement account. So that's a pretty big advantage depending on how much you're paying yourself. If you're paying yourself $100,000, that's an extra $4,000 away. Very nice.
Being kind of going back to your discussion about kind of doing the extra withholding so you don't pay the pre-estimated quarterly.
Right.
That's all done
on that website that you showed.
W4. Okay.
So you would go in and put your bonus, or where she was saying you could do 1,000 or 20,000. You would pick your bonus amount, and then you would pick a higher federal and state withholding. I don't do it through ADP, but I'm sure there's a manual button.
I call them up and say,
She calls them up.
I call them up and say, hey, I want to put
Oh,
an
we use
extra
ADP. I just have
$10,000 towards federal taxes. And I don't pay myself more. I don't give myself a bonus. I just say I'm paying extra taxes. So when they pull it out of my operating account, instead of my taxes paid being $5,000, now it's going to be $15,000. So they take it out and send it.
You can also set it up yourself if you want to withhold extra. You can do a percentage or a flat amount. But again, if you have questions, we're always here.
Also, I'm sure a lot of you have like financial advisors that you work with. You can, on the 401k, we can put those advisors on the plan where they can go in and manage, your investments and give you all the advice you possibly need. And, say they charge 0.5%, we'll take care of paying them out and handling all that for you as well. Any other questions? And our contact info is up here. Just once again, if you want to shoot us an email, text, or call, we can come to your place of business or come here, grab coffee, whatever it is. Usually takes 15 or 20 minutes. If you're not set up yet with the S-Corp LLC, definitely recommend getting with your CPA or your tax lawyer, and then coming to Wells Fargo, opening a business account, and then we can definitely help you out with everything from that standpoint going forward.
Did you have a question?
Did you say what the cost is for the payroll service per month?
So it depends on the frequency. So it's just based on the number of employees, which for most of you is just gonna always be one.
Have one.
Yep. And the frequency, what are you thinking
Like
as far
monthly?
as monthly?
Yeah.
It's $50, like roughly $50 monthly. So it's really cheap for S-Corps. I know people are like, we're thinking it's a lot more. It's not. So, and it's all a business write-off, obviously. And you just log in once a month.
But
You can even,
you have access, like if you need to go in
100%.
there and be like, oh, I need to pay myself
Yes.
a little bit more this month. Or I
you do it yourself. We don't run it for you.
Yeah, so
Yeah.
we would sit with you, get you set up, implementate, and go logged in. You have your own personal login. You can do it on your phone. You do it on your computer. It's web-based, so it's not like it's like a program you have to download. So you can get on any computer and do it. And we'll show you how to do everything. It's going to be really easy, though, for y'all. You literally just have it set up with your information in there, your direct deposit set up. You just go in and type in the salary amount for how much you want to pay yourself. You'll see all the taxes that are going to come out. Oh, yeah. Yeah, we'll link to your business.
What's like the initial meeting to get everything set up?
There's no setup fee.
Well, for the payroll,
Oh, payroll.
there is a $200 setup fee, but we reduce it to $25. Just like you guys work off referrals, you write down 4 names and numbers of other realtors, you reduce it to $25.
Yeah.
So, and you also can get free payroll if for friends, or, I'm sure a lot of you in this room could get free payroll if we all went through. So like Kurosh, and they did one of the other. So it's pretty cool.
Yeah, so for each, say from a referral standpoint, for each person you refer, you get $100 to your business account. After 4, they turn your billing off for the year, so you get free services for the year. So that's simple.
So what information do we need to have before we go on the portal? Or before we...
So you would just reach out to me, and essentially what I would need to get from you is going to be
Tax ID number.
EIN, yep, and then the legal address, whatever it may be. If you want the mailing address to be the same, and then we're going to need the state tax IDs, depending on what state you're in, and then just some bank proof. So whether it be a bank state for the business bank account, so whether that be the business bank account, it could be a voided business check. We just need something that shows the business name and then the routing and account number. And then I just essentially have you fill out an employee sheet, and you write in your personal info, your W-4 information, and then your personal bank account if you want direct deposit. And that's it. And then we'll set it up for you, and then we'll get together, run the first payroll. You're going to get an email. It's like, here's your user ID, here's your password, set it up, and we'll log in, help you run the first 1 or 2. And then from there, it's really self.
Yeah. And we're both local,
yeah.
so if any kind of questions, we can help you with whatever you need.
Always. Yeah.
So if you have employees that do not want direct deposit.
We do checks.
Yep. There's no cost.
Checks get overnighted, so show up to your address, your business address the next day. If you have 1099s that work under you, so I used to work in payroll before 401k, and I had a couple of folks that they had their own they worked under Remax. They had their own little group in Remax where they might have folks that are paying 1099s. You can pay the 1099s through there as well. We keep up with the 1099s. It gets direct deposited to them. We'll send you the 1099 at the end of the year to issue out to them. And as far as if a lot of you said you use QuickBooks, we integrate with QuickBooks. So, you process that payroll. The labor cost runs into QuickBooks automatically for you. So you're not going in there and entering all that information in. And even on top of that, our software comes with a product just like QuickBooks. It's called Wave, where you can do all your invoicing and your accounting and keep up with your transactions and business expense and all that stuff too.
You can link business bank accounts.
And that's included in that $50 price. So it's another nice thing to take advantage of.
And you said we can pay out to different accounts?
Yeah.
Yeah, you can pay other businesses.
Yeah. You put in 1099 that somebody you contract out to do something for sure.
You can even have your direct deposit for yourself. Like if you want 50% to go into your savings,
Right,
or like
do that.
my boss has a small percentage go to her son's checking account. He's in college. So things like that. Yep. She's like, yeah.
Yeah. Any other questions? Cool. You turn over.
Yeah.
Is this
the clicker?
Yeah, okay. That should work. Hey everyone, I'm Dane Brantley with Wells Fargo Business Banking. Sit just across the street at our branch on Sharon Road on the 4th floor. I have brought some of the relationship team here up with me, but I'm the main contact for Remax Executives Business Banking relationship with Wells Fargo. So I work closely with Hadi, Karush, and the accounting team. So any needs that Remax may have with Wells Fargo, Karush will reach out to me. And if it's something where I need to engage other internal partners, I will connect that internal partner with Karush, and we will help them with the solutions that they need. So As part of the business banking relationship team, as I said, I'm the relationship manager, and I will let some of the rest of the team introduce themselves and their roles.
I'm Jessica Cooper. I'm the business associate. I support Dane. So I'm pretty much the one that's in the office from 8 to 5, Monday through Friday, while he's kind of out in the market, meeting with clients and bringing the business. So.
And I'm Jim Harpum. I'm the treasury management sales consultant that works with Dane and a few of his peers here at the South Park office. And he brings me in when there's a business being formed or a business that wants to look at other ways of managing their working capital and automating day-to-day operations. That's where I kind of come into play with like cash management solutions.
And Jim has a sales analyst who's not here, Jada Wintons, who works in our Uptown office, assisting with some of the functionality that some of our clients would need through Jim and his team. So the RE/MAX executive relationship with Wells Fargo is an extensive deposit account and cash management partnership. For you all as RE/MAX employees, as well as where you have companies set up under the RE/MAX umbrella, you all have access to the business banking suite of deposit accounts and credit options, which we're going to go through in more detail here shortly. But one of the main things that I think Karush has talked to you all about, and I know he's talked to me about, has been the benefits of if you have a Wells Fargo account set up versus another bank's account. If you have electronic funds transfer, which is also known as ACH transactions, those transactions from a Wells Fargo account, meaning a RE/MAX executive account, to another Wells Fargo account can be same day. So those funds would be available same day. While if you have a non-Wells Fargo account set up and you're getting electronic funds transferred from the RE/MAX Wells account, it can take 1 to 2 days for that fund's availability. So that's an advantage there. We have 2 types of deposit account options. So I'm going to go through the non-analyzed accounts first. These are basic free checking accounts for businesses. You do have transaction limits on these, so you can only do a certain number of monthly transactions, so payables and receivables count towards that. You do have a minimum balance required. You cannot send any funds via ACH. You can't send electronic funds, but you can receive those. You don't have any other automated capabilities. If you ever want it, if you're familiar with what a desktop deposit is, that would be if you have a check scanner in your office, you can scan that check through that machine and it deposits to your bank account just like you would if you're taking that check to a branch to make a deposit that way. You would not have that capability. And wire transfers must be done in the branch or by phone. And remind me the phone and branch wire costs.
For domestic wire, it's $30.
Okay, $30. And so this is your basic business checking account that's free of charge. If you just really want to have something set up for deposits, kind of monitor online banking, you maybe have the occasional wire and you don't mind doing it over the phone or in the branch. This would be the type of account that you would want to look at. The other account option is called the analyzed account. That's what RE/MAX Executive has with Wells Fargo. So this is the robust business checking account with full automated capability. So there is a cost per transaction. Your functionality is available a la carte, meaning so if you said you just wanted to have the capability to have ACH transactions, wires, and desktop deposit, we would set you up with just those services, not a whole bundled suite of services that you don't actually need and you'd be paying for. So it's on an as-needed basis. You can add and subtract those services as needed, meaning if you needed to add a new functionality, we can add that to your existing account structure. There's something called an earnings credit rate that helps offset your monthly fees, and what that is it basically takes your average collected balances in your account each month and helps offset the fees based on an earnings credit rate. So if you had $100,000, the earnings credit rate is 30 basis points. It would do a calculation to help offset your net fees that you had to pay each month to the bank. Does that make sense? With the analyzed accounts, you get access to the commercial electronic office, which is also called CEO. It's our online platform to have the ability to make these transactions all in our online platform versus, for example, you can do wires through CEO with analyzed accounts, and wire costs
$11.
$11. So you have a reduced cost for that. Any questions on the different account structures? It's all pretty straightforward.
Both of them do integrate with QuickBooks as well. So whichever route you go, there is that QuickBooks integration that you can do online through the bank. And both of them do have mobile options. So, your non-analyzed account does have some basic capabilities and online access, as Dane mentioned. And of course, the commercial electronic office or CEO, you can also access that and transact from your phone. So you can initiate a wire, so big from your phone via CEO. Online bill pay is available through the standard business online banking on wellsfargo.com, but not CEO.
So I'll kind of walk through the account opening process. I think this touches on a lot of what the prior presentations were talking about. But in order to get a business account open, we would just need to collect your formation documents. So your articles of incorporation or organization based on your business, how it's structured, being an S-Corp or an LLC. A certificate of good standing is registered with the Secretary of State. We do collect now a certification of beneficial ownership. Basically, this confirms individuals with 10 or more ownership and or individuals within the business that have authority and control of the entity. That's just a quick 2-page form that we have. And then the individual information, we collect individual profile form. That just gathers your name, address, date of birth, social security number, and driver's license or passport information. It can take up to 10 days for an account to be open after the submission of all this information. Just kind of keep that in mind as far as the timeline. Anything you wanted to add? Jessica, so for example, if you did have a need for a business account, you would contact me. I would involve Jessica, and she would help with getting this paperwork all submitted and the account open for you. So. Credit options. So for businesses your size, we're typically looking at lines of credit, which could be just a simple working capital line of credit or a business credit card. These limitations, as far as dollar amount, can range between $10,000 and $100,000. It's designed for established businesses with 2 years of history. There's a minimum information needed for submission, so it's not like we have to collect all kinds of paperwork, loan applications, basic adjusted gross income of your individuals and guarantors with 25% of ownership in the business. So that's the very bottom line on what used to be the first page of your tax return. I think it's now on the second page, the tax return, the AGI. Is that right? Yep. So that's just really a verbal confirmation of that. And then the annual gross income of the business entity. Anyone with 25% or more ownership in the business for credit options is required to personally guarantee the credit, the line of credit or the credit card. The good thing about this is there is no collateral necessary, so it's an unsecured product. So you don't have to pledge business assets or anything for this type of credit. It's evergreen, meaning there's no maturity date. So we're not going through a renewal process every 12 months and collecting new information each year. As you would in a typical business credit transaction for dollar amounts over $100,000. Your rate is determined by the personal credit score of the owners and guarantors. So it's floating based on prime, which is currently at 5.5%. Although there's been some talk recently about the Federal Reserve potentially lowering rates this year, but I think the consensus is they'll probably stay steady. But prime's determined by the Federal Reserve. So it's floating based on prime with a range of 1.75% all the way up to 9% over prime. That's again based on your credit score personally. Any questions? If you're interested in credit card options, we do have both points and cash back as far as rebate options as well. That's all we have.
Anything you want to add? Yeah, actually, I want to circle back with you on that, on online bill pay. Take that on a case-by-case basis. You know, what I do with Dane and our customers is just helping them maximize free cash flow. And especially as a smaller business, you know, you really want to optimize that wherever possible. Online bill pay is great on a personal side. I use it, you know, for what I don't use for my credit card or pay online and have them draft me. From a business standpoint, though, that can get a little bit tricky. If you only have a few expenses a month and they're not big dollar, sure, online bill pay is great. If your expenses are a little higher, I would not recommend it, and the reason being they will pull that money out of your account 5 days in advance. So, you know, you're typically, when you use an online bill pay provider, and just so you know, like all of the banks, they're branded under the bank that they work with, but they are not a bank, you know, exact bank service. It's going through a company like Fiserv, Metavante, CheckFree. You know, all those companies are kind of doing it, you know, through their partnership with a bank. And so the way they make money is they're going to pull the money out 5 days in advance and then mail the check for you on your behalf. That can get costly. That can be problematic if you do have a little bit higher of expenses. So I would just caution you to use it wisely and cautiously. And if you ever want to have those kind of conversations, let us know. But it really is just do whatever you can to minimize the amount of money going out of your account any sooner than you have to. And there are many more options coming down the line. You know, you saw Dane point out that, you know, having that Wells Fargo relationship does allow you to get paid same day. There are quite a few options coming out already and going to be enhanced. So right now there's also the same day ACH in general, up to $25,000. They're going to increase that, I think, by the end of this year, up to about $100,000. Makes life a little bit easier. And then probably coming in 2020, you're going to see a lot more information about real-time payments, where it's no longer constrained by bank hours and holidays. It's going to be very similar to what you see in Europe, where they send you a payment at, you know, Saturday at 10 p.m. It hits your account and is available Saturday at 10 p.m. So a lot more to come. But just wanted to kind of throw that out there, but really to circle back on that. So thank you for that question. Anybody have any questions for us?
Good. Well, I'll leave a couple cards. Yeah, it's lunch. Everybody's hungry. I'll leave a few cards. Please feel free to reach out if you want to inquire about anything for your business needs, and we'd be happy to help.
Yeah.
Thank you.
Thank you all so much for coming.